everyone, Happy New Year. I hope you all enjoyed the festive period, come back feeling very fresh and ready to tackle another year in the markets. It was a much slower period over the last couple of weeks, which is unsurprising. Lower trading volumes, lower economic stimulus in terms of economic events, I should say. But things are starting to pick up once again today. It seems that so far today the dollar has very much been king, or broadly speaking anyway. We've seen a few cases such as commodity currencies which have actually been outperforming the dollar. I'm just zooming out my charts here just to get a little bit more data and refresh the charts themselves and get the trend lines and all the drawing tools and indicators back on here. I've just restarted my platform, you see, which is why they're all looking a little blank at this stage. But obviously all of the actual analysis is up to date. Like I say, the dollar has broadly been king today. We're seeing the dollar index, for example, currently up around 1%. We did see the Australian dollar and the Canadian dollar outperforming a little earlier, but I think it's going to be interesting over the next couple of hours to see how that reacts to the sudden decline in Brent and WTI crude, which we'll come to very shortly. I'm just going to take a little look at some of the charts, the major currency pairs and a few commodities now to start the week off. Of course, it is Tuesday, but yesterday being a bank holiday means today was the first. I was personally out of the office over the last couple of weeks, which is why there hasn't been any videos, but hopefully this should provide you all an update. To be honest, like I say, there has been some volatility in the market over the last couple of weeks, but I wouldn't say there's been any major changes to what we've seen in the markets due to the fact that we have seen we have seen relatively little stimulus. The moves in euro dollar over the last couple of days have been quite interesting, though. We saw that the euro rallied up to around 106.50 against the US dollar, but this broad dollar strength, which I've just been referring to, did drive the pair lower, back towards the lows of around 103.50s. Now this brings us back to an interesting area. For one, it would suggest that there's very much the strength is with the bears here. You can see all we have to do is add a Fibonacci retracement here, and you can see that initially the move low, we saw it come back to around the 50 fib level. Then we made these new lows here once the 50 fib had been rejected, and now it's come up to around the 50 to 61.8 region before turning lower again. So it would appear that the trend is very much still lower. The one thing which makes me a little bit nervous here, and the one thing which makes me think that potentially this dollar move is potentially looking a little overstretched, is the fact that we're now seeing these lower lows being made on falling momentum, which tends to be not necessarily a bullish signal in itself, but a warning sign that momentum may be falling out the move and maybe a broader correction is on the cards. You can see the MACD histogram here making higher lows on the most recent period of lower lows in the price action. The same applies to the moving averages, and the same also applies to the stochastic as well. So these are warning signs. These are red flags, not necessarily bullish signs in themselves, but they are red flags for those who are bearish still. But like I say, we have seen these lows tested around the 103.50s. In fact, we have actually made new lows in euro dollar on the move today before the rejection higher, which we've actually seen over the last hour or so. Should we see another move below this level, then we could see a move back towards these 103s, 102.50 to 103s, which is a multi-year low in euro dollar. But for now, it looks like these 103.50s are holding quite well at this stage. We could see a potential resistance here around the 105 levels. This is the most recent lows here, and also an area of resistance back on the 22nd of December. Of course, we did surpass that level when we hit these 106.50s, but that may provide some form of temporary resistance. It's not a bold black line, it's just a thin black line because it's only a possible resistance, given that it's been a notable level in the past. But if we do see that broken, then I think we could be looking back towards these 106.50s and potentially beyond if a broader retracement is, of course, on the cards. It'll be interesting to see how how the dollar actually ends the day, given the fact that we started on such strength, and it does seem to be in a retracement at the moment. We look at cable, and we're seeing a little bit of the same here, potentially on a lesser scale. We saw it pull back again to these lows around these 122s before being rejected again, on a second occasion at those lows. It's clear on the 4-hour chart. I think you've got these two levels which I think could prove to be important: 122 and 123. We have traded above here around the 124s recently. Yesterday, I think that was. On the 30th of December. But that 121, as with the euro dollar, had highlighted a level which could potentially be important. This is the next upside level, which I will be focused on. You've got it's a prior level of support and resistance. It's a round number, which I think is always notable, but it's also the lower end of this moving average band. Of course, the moving average band currently quite wide at this stage, but it is a notable area. So the 123, I think, to the upside could prove to be an interesting level. But you look at this rejection on the 122, that's quite a long lower wick. We saw a longish lower wick at this point here around the 122.50s. Earlier on today, but that's a very long lower wick at this stage, and if we see a candle look like this on the close, then that would potentially suggest the dollar has lost some of that momentum. Potentially we are going to see a broader retracement in the greenback. It'll look even better if we see a little green body here, because obviously that would mean that in this 4-hour period we've actually seen a higher close than when we opened, and given the bearishness that we were seeing in the pair on just a little earlier on in this candle, that is potentially quite a bullish signal. Again, 122 being the key level here, and then potentially 124 being the next major test just above that. Of course, that 124 level being this prior level of resistance and support here as well. So a couple of interesting levels here in cable or sterling dollar. Euro sterling, the picture hasn't really changed. The one development I would say we've had in euro against the pound is the fact that we've had the test of the shoulder on this head and shoulders. You can see that we had potential a double head and shoulders forming. We haven't seen the break of the actual neckline yet, but you can see the two shoulders on this left hand side. You can see the head up here around 91.50. We came back, we retested the neckline, which also coincides with that moving average band, the 200 and 233 day simple moving average that held at the first time of asking. We saw a test, funnily enough, ran into resistance around the same region that it ran into resistance last time it made a shoulder. We've come back, we've retested the neckline and moving average band, we've retested the shoulder again, and once again this level's held. This is an important zone, because if we see a move back towards these 82.50s, 83.50s, and we actually see this level broken, it's a very bearish signal I think we've got on our hands there, and that could suggest we're going to see a much broader move to the downside, with the shoulder to the neckline projected, potentially giving us a conservative projection lower, or if for the more aggressive among us, they head to the neckline could give us a much more aggressive projection lower. So this is going to be one which I'm going to keep an eye on, especially given the fact that we've had that rejection with that little nice long upper wick around the 86.50s and a red body. For me, this is looking quite bearish at this stage, and I'm looking back towards these 82.50s to 83.50s for the next big test. I mentioned the commodity currencies at the start of this video, and you can see here that the Australian dollar is one of the few currencies which is actually outperforming the US dollar so far today. Now, we have pulled a little back a little bit over the last hour or so due to the retracement potentially in commodities, most notably in oil, which we'll come to in a second. But I find the Australian dollar quite interesting at the moment, because we did get that big sell-off all the way back to around these 71.50s, which was this previous zone of support I highlighted. Then we've started to see some consolidation back into the 72.50s. Now, if we see a move above this 72.50, then I think we could be looking at around these 73 levels, this prior zone of resistance. But if we look at the 4-hour chart, it looks like we've entered into this kind of consolidation phase. Now, what that says to me is we've got a marker really in the sand. We've got the 72.50 and the 72 to the downside. If we see this broken, then we could be looking back towards the 71.50, 71.60s, which could prove to be an important support zone. However, a break above the 72.50s brings those 73s into play, because 73 is not only the most recent resistance test of around 72.80, I should say. You can see that we saw some consolidation around this level previously, the bulls and the bears colliding here. We saw the consolidation on the back of that before we saw it trade lower. That highlighted as an important zone of potential support and resistance. But we've also got the 89-day simple moving average band here as well, around the 72.95. So this 72.90 to 72.80 to 73 strikes me as being an important level of resistance should we see 72.50 broken. And a break above here, then again, suggests we are going to see a broader consolidation in the pair, which, let's face it, given the aggressiveness of the sell-off previously, wouldn't come as too much of a surprise, at which point we could be looking back towards the 73.60, 74, 73.50, 74 zone, which is the most recent area of support, which could prove to be an interesting level of resistance. Now, during the move down, we came back close towards a 50% retracement level before heading low once again. I'm always interested in seeing how we react at the fib levels. The most notable clear swing high and swing low are these from the 14th of December and the 23rd of December. So the most interesting level I'll be keeping an eye on first is going to be around the 73s, which, as I've just highlighted, is my next notable level of resistance. After that, I'll be around the 73.50 is the 61.8, but is a 50% retracement, sorry. But as always, I'm not necessarily interested in the exact level itself. I want to see how the pair interacts around the 50 to 61.8. So the exact level itself isn't overly important to me. The fact that it coincides with previous previous support, I think, is quite interesting. You can highlight here, so you can just see a confluence of potential resistance levels around that 73.75, so 73 to 50 to 74. So a breakthrough here brings 73 into play, and then I think this is going to be the most interesting area for me beyond there. Dollar CAD, another commodity-driven currency. You can see that the dollar was actually losing ground on the Canadian dollar earlier in the session, and we also saw similar moves yesterday. The retracement in oil appears to have hit the Canadian dollar, which is why we're in the retracement off the lows. Interestingly, though, seen a retracement off the same lows we saw off yesterday around 134. This is also the 38.2% retracement of the move from the lows on the 14th of December to the highs on the 28th of December, and it also coincides with this previous zone of support and resistance. This, for me, is starting to look a little bit bullish potentially. If we see a close around the current levels or a little bit higher, then I think we could potentially be looking at a move back in towards these 135.50s, 136 levels, and potentially heading a little higher. Once again, a break below these 134s could open up a move back towards these 133.40 to 132.80 zone. Again, the 50 to 61.8 zone could become very interesting here. But for me, I think the bulls are coming in, and I think this pair appears, at least in the short term, to be catching a bit of a bid, which could maybe drive this higher. But again, I am a little bit cautious on that dollar rally, so it'll be interesting to see how this plays out in the dollar CAD pair. This could very much be dependent on how we see oil trading over the next couple of days. Next up, the yen pairs, and again, we are seeing signs of potential exhaustion here, but the thing with exhaustion is doesn't always necessarily mean that we're going to see a movement in the opposite direction. We saw this rally higher, this rising channel in dollar yen. We saw it come back, we saw it break slightly below it before catching a bid around that prior area of resistance, but also prior area of support as well. Here we have rallied high off the back of this, but once again we've run into resistance around the 118.50s. You'll remember the 118.50s is this important zone of support throughout the period from February of 2015 through to October of 2015. And once again, we've run into resistance and come off those highs. Again, this is being helped, I think, a little bit by the fact that we are seeing the dollar lose some of the momentum in today's rally. But it is also potentially indicative of the fact that it is the longer term move is becoming exhausted. It'll be interesting to see how this day pans out, because if we see a move above here over the next day or two, then it would suggest we're potentially looking at a move up towards 120, whereas a move below the 116s would suggest that we are going to see a broader retracement, potentially bringing these 14.50s to 115s into play, and potentially even lower. Again, what I find interesting again in this pair though is that we are seeing momentum falling out of the move, both in the stochastic, the MACD histogram, the MACD moving averages, all are pointing towards momentum falling out of this move, which is why the bottom of this channel being broken isn't a huge surprise to me, which is why a rejection at 118.50 again is potentially unsurprising as well. But it'll be interesting to see again how this plays out. Price action is king. This is indicative of an exhausting trend, but doesn't tell you when the trend is actually going to reverse to the downside. And I think, as always, that is an important thing to consider during these moves. What I find interesting also here is the fact that it's all the yen pairs which appear to be showing signs of exhaustion, not just the dollar yen. So this isn't necessarily just a dollar exhaustion move, but potentially a yen exhaustion move as well. We've seen the euro rally up towards these 124s against the yen, but this appears to have been rejected yesterday. We saw it close well off the highs, and again we're seeing it trade lower once again today. So now we've got another important zone for me. I think we've got these 121.70, which is an important level of support. Area of support, having been support on the 20th of December and again on the 29th of December, and above you've got those 124s. Break in either direction would, I think, is going to send a strong signal. We may find further support here around these 120.90, 121s, but I think a break through that 121.70 potentially indicative that we are going to see a broader retracement to the downside, a break through the 124s, suggesting that the move can quite easily carry on higher through here. I think 125 could become key, but again, I'm keeping an eye on these moves in the stochastic and the MACD because all of them are currently suggesting a correction is due for this pair. Let's take a look at sterling yen, and again we've seen some consolidation in this pair, but what I find interesting about this compared to the others is we have seen a break through the channel, and we have seen a bit of a correction which has been more so than what we've seen in the other pairs. But again, what I find interesting is we found support on the moving average band. On this occasion, let me just open this up. On this occasion, the correction has been found, and we've found support on the 200-day simple moving average before bouncing high. This could potentially be a relatively bullish sign, which may be more indicative of a move in the pound rather than necessarily the yen. Like I say, the yen, it looks like it's going to potentially catch a bid on against the euro and the US dollar, but here it looks like we've already seen it catch a bid against the pound, and if anything, the pound is looking more likely to find some support in the short term. At least that's how it would look, given the fact that we found support in this moving average band. Should we see a continuation of the move higher, then the first test, of course, comes around the previous highs around 148.30. Beyond there, we could be looking back towards these 152, 153 levels. However, should we see a break below these previous lows around 142.25, which is also a low back here earlier on in December, then potentially that would suggest that we are going to see a move, which is a move similar to that, which I think we could potentially see over the next couple of weeks in the dollar yen and euro yen pairs. A break below this level potentially opening up a move back towards initially around maybe these 138.50s, prior level of support and resistance, which would bring us back towards the Ichimoku cloud as well, and could provide quite a decent test of this as support, confirming the longer term uptrend. As I've already mentioned, Brent and WTI have come off their highs today. We saw Brent moving higher today, and this has been attributed to certain countries who have taken part in the agreement to cut production, outlining their plans already to start cutting production in January. But it seems that the dollar strength, which we've seen today, may potentially be being responsible for capping some of these gains in WTI. We saw the dollar making new highs for the day just at the time that we were seeing Brent and WTI rotate off of their own highs. So this may have been a potential earlier trigger, maybe some stops being taken out on the back of that. Personally, I'm looking at this move and I'm saying, well, really, when you look at the last time when we made a high around 56, we saw this big rejection. Then we saw it make a new high around 56.30, relatively sizable rejection. And then we've come up towards 57, big rejection. For me, this just looks oversold. I think this is one of those cases where traders potentially just finding any excuse to sell, and maybe the dollar making new highs, maybe some of these other oil-related stories, such as I think it was Libya, potentially pumping more oil, giving people the opportunity, giving people the excuse to potentially lock in some profits on these longs, or potentially even shorting at these higher levels. But we've definitely seen a rejection at that 57 level, and for me, I think we are potentially due a correction here. It'll be interesting to see how we trade around these 54 levels, having been a prior area of resistance, but beyond here, potentially around the 53. But I think really I'm looking at the bottom of this channel here around $52 here, and I think this is going to be the big test. It wouldn't surprise me if we see it trading back around 52. A move below here would potentially come as a bit of a surprise, given that people are generally more bullish here. I think 52 would represent a correction, a break of 52 potentially representing a lack of faith in the actual deal to be carried out. And the same applies to WTI as well. You can see that we had the rejection initially around $54 back in December. We saw it come lower. We've seen it move just above here towards 54.50. Big rejection lower. This again suggests to me that the pair is a little bit overstretched to the upside and potentially in need of a correction. First test here coming at around 51.35 to 51.75. Should we see a break below here, which is the most recent levels of resistance, then I think we'll be looking at $50 to 49.50 could be a big test for the pair, because again, a break below here potentially indicating a broader correction in WTI. Let's wrap things up with gold. Gold's actually rallied beyond the 1150 level. I was talking in one of the previous videos about the tendency for gold to move in $50 bands, 1100, 1150, 1200, and so on and so forth. We did come right down to around the 1100, but we actually stopped short at around 1120, and we have rallied higher. Now, initially we found resistance around 1150, which potentially suggested we were going to see a move back to the downside. Instead, we've seen it break through these 1150 levels, despite the fact that the dollar has continued to rally. Dollar's rallied again today, and yet gold continues to push on higher. Now we are trading around the 1160, but the fact that we've broken 1150 and retested it, you saw yesterday, suggests to me that there is the market is looking a little bit more bullish on this in the short term, and I think there could potentially be some more upside to come. If we look at the 4-hour chart, we have broken above the 1160 resistance already today, although we have pulled off of these highs temporarily. To be honest, I think 1170 to 1180 represents an interesting zone for me. You've got the 200 and 233 period of simple moving averages on the 4-hour chart, but also you can look from here on the 24th of November through to here on the 8th of December. This was a very interesting area of support and resistance. So the fact that this coincides with the moving average band makes this a very interesting zone for me, and a breakthrough here potentially opening up a move towards these $1,200 levels. But gold not looking as bearish as it did previously, having broken back above the 1150 levels and retested it as new levels of support. I hope you all found that useful. I know it was a bit of a longer video today, but with it having been such a long time since the last video, I thought I'd go a bit more in depth. As always, your feedback is much appreciated. Any comments you've got, please write them below. Any feedback, please write below. And if there's anything else you'd like me to cover in more depth, then please just ask and I'll be happy to cover it. For more in-depth news and analysis, check out OANDA MarketPulse at MarketPulse.com. You can also find out more about OANDA and sign up for a free demo account at OANDA.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.